Welcome to nabtrade's Expert Insight series. I'm Gemma Dale, nabtrade's Director of SMSF and Investor Behaviour. Today I'm joined by Eu-Jene Teng of Currie, a Legg business in Australia, to talk about emerging markets and some of the opportunities they might provide for your portfolio. Eu-Jene, thanks so much for joining me.
Thank you, Gemma. It's a pleasure to be here.
So I wanted to talk about growth opportunities in today's market. You have an amazing way of describing the fact that Currie has been investing in growth opportunities around the world for a really long time.
Yeah, so we manage about $12 billion of global equities, emerging markets and Asian equities out of Edinburgh, and then another $12 billion of Aussie equities in Melbourne. But the interesting thing was we started with investing in what was then the emerging market of the United States in 1881. And the big concern back then was not things like the trade wars or low interest rates. It was actually outlaws, cowboys on horses, and people like Jesse James and Billy the Kid, because we were invested in American railroads.
So the concept of emerging markets has been around for a really long time, but how they've developed over that period has changed quite dramatically.
Yeah, so just to clarify what emerging markets are, we know what developed markets are. So those are your existing large economies like the US, Australia, Western Europe and Japan. Emerging markets have a lot of those characteristics, but they're not there yet. So you're talking about places like China, India, Latin America, and a lot of parts of Asia. With regards to emerging markets, the interesting thing is that they are rapidly evolving. So if you look at where the growth is going to come from globally, the next 5 years, it's largely emerging markets. So we predict that emerging markets over the next 5 years will grow at 3 times the pace of the developed markets. So close to 5% compared to 1.7% for developed markets. But even more interesting is that right now, at this point in time, almost 2/3 of all the growth in the world is coming from emerging markets.
It's a really interesting statistic given how many people are looking for growth in their portfolios. They feel that we're toward the end of a bull market in developed, certainly in the US and in Australia and some other markets as well. They're searching for that growth and really struggling for ways to find it. Do you find that a lot of investors find it challenging to accept that emerging markets are really where the world is heading?
I think so, especially if you don't live in an emerging market. Being in Australia, we're so physically remote. The thing is, emerging markets have a number of things really going for them. Number one, they don't look like the way they used to be. So post-World War II, if you're a history buff, emerging markets largely took the decision to follow the Soviet model of running the economy. So you had a lot of centralized governments and infrastructure and industries. And so what that meant was a lot of their industries were things like energy, manufacturing, industrials. The issue with those is they are very non-dynamic sectors and they are very cyclical. If you look at emerging markets now, they actually look very much like developed markets. So they have largely a lot of consumer sector, technology and fintech. The interesting thing there is emerging markets have huge tailwinds. So just to give you an example, China, if you look at China right now, we predict that by 2030, they will have 5 super cities. A super city being 120 million people times 5. So that's 600 million. That would be basically 4 Australias per city. So that's huge. Even right now, they already have 9 cities the size of New York. And by 2030, we predict that they will have 23. Now that really changes their society significantly, and with it brings a lot of investment opportunities. So you're talking about China needing 8 times more railroads and 3.5 times more data. Now, what that does is it creates certain brands or stocks that are world leaders. I'll give you a perfect example. 11th of November is Singles Day in China. So you've got 4 ones. 11th of the 11th. So that signifies the Chinese view that being single is an appropriate state of being and worth celebrating.
Time to go and spend a lot of money on yourself.
Yes, That's right. So Singles Day is the largest sales day for Alibaba in China. The numbers are astounding. So they sold $38 billion in one day. Now, that is 440,000 US dollars per second of sales. It's more than the annual sales of companies like Nike, Starbucks, McDonald's, H&M, Adidas. I could go on and on. And it would take Amazon close to 100 days to reach that equivalent number of sales.
The numbers are extraordinary when you think about it, and it's very easy for people to understand the tailwinds of these extraordinary developing consumers, right? People who didn't have a great deal of wealth, they were frequently in poverty 50 years ago, who are now enjoying single stay and enjoying developed market opportunities. What are the big themes that you guys find most interesting? What are the big trends that you're pursuing?
Well, one of our mega trends is electric vehicles. So everyone's talking about Tesla. Now, our view is that placing an investment on which car manufacturer will succeed is very risky, because it's a very old industry, 100 years old, but it's going through the most disruption it's ever gone through before, and it's going to cost them a lot of money. So if you remember back to my railroad example earlier in America, that was because you had a gold rush in places like California. And the natural inclination is to go, I'm going to try to make my money by digging up gold, because there's a gold rush. Now, the problem with that is it's very risky. What you could do is look at other parts of the supply chain, of the manufacturing process, and say, basically, I could sell shovels to the miners. And that way I've got a much higher chance of making good profits. So with regards to electric vehicles, we think one of the best segments in that whole ecosystem is the battery manufacturers. Now, the reason for that is there are only 6 major battery manufacturers in the world, which right now produce about 80% of all the batteries in the world for cars. The interesting thing there is most car manufacturers only have 1 or 2 contracts, and they want to use existing battery manufacturers who really understand how to do this. One of the main reasons for that is, understatement here, but you don't want your car battery to blow up or your car to set on fire. That's not a good thing. So what I'm trying to say there is the incumbents have a lot of power. Now, the stock that we really like is LG Chem. So that was started in 1947 in Korea as a cosmetics company.
Right, the battery/cosmetics thing is that's an interesting shift for them.
Yeah, because what happened was, from there LG Chem started manufacturing chemicals, and they are now the 10th largest chemical manufacturer in the world. So that is one of the reasons why we think they are one of the best battery manufacturers, because the chemical part of their business fuels the R&D for the battery manufacturing, which most of their competitors do not have. And the interesting thing about LG Chem is they are ramping up their production by about 6 times over the next 5 years, so 600% increase, and they have 4 of the 5 largest car manufacturers in the world as their client. But even then, even with that ramp up, they still will not be able to fulfill all the demand that's out there. So we like that. The biggest risk for LG Chem is just whether they can implement and manufacture enough batteries for the demand. And we like that risk because it's a risk that is completely in their control.
I think that's a really fascinating one, and I love the fact that you're telling a story about an emerging market economy supplying, frankly, products to the first world, and a developed world need, and we're trying to adapt to meet their needs. Tell us how people can access those sorts of opportunities via Martin Currie.
Yeah, so first of all, it's very hard to access the stock because it's based in Korea, but for those who are interested, they'll need to have their pens ready. It's 051910, open brackets, KRX, close brackets.
nabtrade investors can invest in a variety of markets. They can invest in the UK, the US, Germany and Hong Kong via the platform. You can buy directly. You cannot invest in North Korea or South Korea, and you don't want to go anywhere near North Korea. That's not going to work at all. But South Korea is not going to work either. So how can they access the product via you guys? So
via nabtrade and the ASX, there are 2 listed vehicles that they can use. So they can buy the active ETF, which is EMMG.ASX, or they can use the M Fund, which is code LMA 12.
Beautiful. Eu-Jene Teng from Martin Currie, thanks so much for joining me.
Thank you, Gemma.